What should you do with your money in 2020? Well, it's coming up right after this.
Your trusted real estate source, one video at a time.
What's going on, guys? Alex back here for another video. If this is your first time tuning into my YouTube channel, welcome. My name is Alex. I'm a top producer real estate agent out here in Washington, and I designed this whole channel around real estate. So if you want to learn more about real estate, learn how to invest in real estate, and ultimately learn how to make money through real estate, well, then this channel might be for you. Think about hitting that subscribe button down there, and now on to the video you're waiting for. So this is normally the time of the year that people sit down, they start writing down their goals. How can I become financially stable? How can I create a lifestyle that I want in 2020? And that's ultimately what I'm gonna break down in this video, some of the things that I'm gonna do with my hard savings, what you could do with your money that you saved up in 2019, not only to increase profits in 2020, but ultimately just to have a better life and to have a better lifestyle. First thing you should focus on in 2020 is to buy real estate. My favorite quotes is from Andrew Carnegie, and he says 90% of all millionaires become so through owning real estate. I believe investing in real estate is superior over all investments, like investing in stocks, mutual funds, ETFs, index funds. And the reason for this is that you're leveraging the bank. When you buy real estate, you're most likely leveraging the bank, which means if you buy a $500,000 house and you put 20% down, well, yeah, you're putting $100,000 down, but you're taking out a $400,000 loan. If you invest in other things like stocks, mutual funds, ETFs, you're gonna have to provide all that money up front, and you have all the risk. So when you buy real estate, in reality, are you really a homeowner? Well, you can think you are, but the bank most likely has all the leverage, and the bank is actually the one providing you with the money to buy the house. And this is why I love real estate as an investment. With little money up front, you can see some great gains. Like back in 2016 and 17, there was double-digit appreciation where I live in Washington. And we might see it again, and even right now it's around 5% for the year. So if you're leveraging the bank, you can make a great return on the money that you put up front. Also, to lead into this, if there is a recession, which I don't see Washington being affected so much in the housing market in 2020, but let's just say that there is, and housing prices dip so much. If you're in a liquid position and have a lot of cash and ready to go, well, guess what? You can take great advantage of this because of the lower prices in houses, so you can get a great deal. Now, if all your money was in investments like stocks, ETFs, and the market goes down, well, you can sell, but are you gonna sell when you're 20 or 30% down on all your investments? Probably not. You're gonna hold on to it and wait for it to come back up. So being in a liquid position is priority right now, I think, going into 2020. Second thing that you should do, I'm gonna do, open a tax-deferred retirement account. Now, this could be a traditional IRA, a Roth IRA, which is post-tax income, and you take it out all tax-free, which is great if you meet those income limits. And then for the self-employed, you can start a SEP IRA. Retirement accounts are tailored after the demographic of people that are younger. So the younger you open one of these up, the better. And you can think of these retirement accounts as the investment vehicle, and you can make basically any type of investment inside of these vehicles that you want. You can invest in stocks, mutual funds, bonds, ETFs, index funds. You can even invest in a CD, a locked-in CD within these retirement accounts. Once you open these retirement accounts, you're gonna have to make a contribution to the retirement account, which, keep in mind, is tax deductible unless it is a Roth IRA. Now, once you make the contribution, you can go a couple different routes. You can manage your money yourself, which I do, or you could hire a financial advisor. Now, keep in mind, when you hire a financial advisor, they're gonna take a fee, and it's normally 1%, and it could be on a quarterly basis, yearly basis, it just depends. But if you're not comfortable, you have no idea what to do with stocks or ETFs, you're totally inexperienced, you might wanna go the financial advisor route at first, just to get some knowledge until you feel comfortable with managing your own money. If you're watching this and you've never invested in stocks or put your money in the stock market, it can be kind of scary, throwing thousands of dollars or whatever amount of money you're going to contribute to this retirement plan. So the easiest way to get easy diversification is to invest in what's called a S&P 500 index fund. If you buy an S&P 500 index fund, you're basically super diversified, which means you're going to own a lot of large cap companies, a lot of different companies spread out through the stock market. Also, it's a very low cost because they're passively managed. If you were to invest in what's called a mutual fund, normally these have managers that will manage these funds, so their cost ratio is going to be higher than just a index fund. On top of that, it tracks the S&P 500 year over year, and we've seen around 10% annual rate of return on the S&P 500 index funds. The famous investor Warren Buffett says these index funds are a no-brainer, and if you put $10,000 in one of these in 1942, let's say you were alive back then, well, it would be worth $51 million right there. So you heard it from the famous investor himself. If you have no idea what you're doing in the stock market, and even if you do, it's always a good idea to put some of your money in one of these index funds and just hold it for 20 or 30 years, especially within a retirement account, because if you do buy and sell the fund, well, you're not going to trigger capital gains tax. Some index funds that I recommend you can look up are the Vanguard 500 Index Fund Investor Shares. This gets you directly into the US large capitalization, great diversification. Another one is the Fidelity Spartan 500 Index Investor Shares. The third one is the Vanguard Value Index Fund Investor Shares. And then the last one gets you into the bond market. They invest 80% of their net assets into the US bond market. And this one is the Vanguard Short-Term Treasury Fund Investor Shares. And this last one into the bond market would be for someone that wants low risk. I think the annual rate of return on this is around 4 or 5%. They have a short-term maturity, so they might keep it for 5 or 10 years and don't want a lot of risk. This would be a great one that you could put some money in rather than, say, a high-yield savings account. The last thing that you should do with your money in 2020, if you want a little bit more risk, if you're the demographic that's watching this and you have a lot of aspirations, a lot of goals, you're young, you don't have a lot to lose, well, then invest the money that you do have in one of your dreams, right? And this might make some passive income streams. So you could invest in a product you want to build. Maybe you want to start a new business. Maybe you want to move to a different state to start a job you've always wanted to. If you're young and watching this, this is the time that you should do that, because if you do fail, well, you can always go back to your parents. If you're 30 or 40, you can't really go back to your parents, and most likely you're going to have a lot more obligations and a lot more risk associated with doing stuff like that. To make a goal for yourself in 2020, try to make maybe 1 or 2 more income streams for yourself. The more income streams you have, the more passive income streams you have, well, you're just gonna build your wealth a lot easier and passively. There you guys have it. Hopefully you liked the video. Those are some of the things that I'm gonna do in 2020 with my money. Hopefully you got some value out of this video. As always, guys, thanks for tuning into this video. Stay tuned for the 3 videos coming next week, and we'll see you guys then. Peace.